This week's listener of the week is Mountain Money. Mountain Money, thank you for leaving us a 5-star review. And for those of you listening, if you leave us a 5-star review below, you might be next week's listener of the week. Week. This week on Commercial Real Estate Secrets, we have Matt Spagnolo. Matt is the fund co-manager at Colony Hills Capital. Matt, thank you so much for being on the show today.
Glad to be here. Thanks for having me.
Yeah. So Matt, I'm excited to chat and excited to hear about your fund and who you are. Can you tell the audience who you are, what you do, and why we are here today on Commercial Real Estate Secrets?
Yeah, absolutely. Again, thanks for having me. My background historically has been in business and economics. Out of school, I got into more of the equities and options market, trading, but also got the real estate bug at an early age. So I was finding a way I thought I wanted to be that investor at thousands of doors, things of that nature. So I started on the sales side. Everybody I talked to in real estate was telling me, hey, Matt, start on the sales side, learn the industry, build a network, and then take it from there. Have a couple mentors in the space, et cetera. So I started on the sales side. I'm on the brokerage side with residential and commercial real estate, while also at the same time kind of launching with our brokerage a small investment team, right? So we were doing everything from small flips to looking at small apartment complexes. I was helping underwrite deals, find deals, as well as to kind of negotiate things of that nature. But ended up getting connected with my now CEO, Glenn Hansen, at a conference in New Orleans. Glenn was looking for some assistance with his multifamily fund to raise capital for the fund, but also on a deal-by-deal basis. So got a little bit more involved on the capital raising side of commercial real estate, especially on the multifamily side. And I fell in love with Colony and our co-GP vehicle that really kind of allows investors to achieve that passivity that they're looking for, whilst having that upside that GPs enjoy. So it ended up being this perfect balance between what I was looking for from a personal investment perspective, while also working with investors and helping them grow their own personal wealth as well. So it's been a fun ride with Colony, and we're looking to scale and do more deals and bigger deals.
So you had brought up your co-GP vehicle being unique.
Yeah,
Let's dive into that.
let's
What
do
is it and why is it
it.
unique?
Yeah, absolutely. So the co-GP vehicle, there are a few other groups that are starting to do it now, but we really started it during COVID. In 2020, capital markets were extremely tight. There were a bunch of new multifamily sponsors and operators, right? Interest rates were at 3% for multifamily sponsors. So everybody was flooding in, and Colony, we needed a way to diversify ourselves, right? Or make ourselves stand out to the retail or high net worth investor. And we created this vehicle that would achieve two goals. It would, one, allow investors to remain passive while also getting a share of the upside that the general partner or the operators usually enjoy. So you get a share of that, but it also allows Colony to do more deals, right? So we can share in the GP equity and allow us to buy 2 times as many deals, right? If we're bringing in additional capital and giving that upside, it allows us to do more deals and larger deals while focusing the same efforts on capital raising, versus and more time on the business plan, right, and the actual execution of operating these deals. So that was kind of the main vehicle and the main purpose. Colony was started as the real estate arm for our CEO's family office, and he wanted to continue his legacy past his own family and bloodline. So it again allows investors to have that kind of family office feel to some of the investments that we do within the fund, but also on a direct deal basis.
So what type of product are you investing in right now?
Yeah, so that's another common theme with Colony is we have stuck with the same strategy since inception. So for over 15 years, Colony's focused on value add, core plus, garden style, multifamily. So the same asset class, workforce housing. We find these off-market, mismanaged deals where we're getting opportunities to have a unique story, right? From mismanagement to them needing to sell to funds rolling up, but we're capturing these deals that have significant loss to lease, where the neighboring property is charging $200 to $500 more in rent, and Colony is going to come in through renovations and other improvements of the property, and we're going to capture that. So the story and the strategy has been the same, and it's allowed us to be successful versus chasing those shiny objects and going into data centers or self-storage, which are good investments for the right operator, but we found an asset class that has worked well for us, and we're sticking with it.
What's your pocket in terms of investment criteria?
I would say that we're taking down deals that are 200 plus units, 50 to 150 million in size. In terms of markets, we're focused east of the Mississippi, and Texas as well, with maybe a more recent focus back into the Northeast. And that might
Hmm.
be a contrarian belief and thought to most sponsors and operators in the space now. But with some of the more uncontrollable expenses with insurance and taxes, we're finding that these properties in the Northeast have almost been neglected, and we're finding great deals, right? 15, 20% discounts to the value of the property on day one. But those properties in the Northeast also have more consistent and expected tax reassessments and insurance, right? They may be higher in
Hmm.
terms of a dollar amount, but as an operator, we can underwrite to that. What we can't underwrite to is uncertainty. So if you don't know what's going to happen to your property in the Southeast, that's a bigger red flag for us, regardless if it's cheaper on a dollar amount. And we're okay with paying higher insurance or higher tax reassessments as long as the year to year change is pretty vanilla and predictable.
Interesting. So what type of like returns are you looking at on these deals?
Yeah. So with the co-GP vehicle, like I said, it's a little bit higher on the upside. So all of our deals, I'd say most of our deals are in the 20 plus IRR net to the investor with I'd say
Wow.
average 6 to 8% yield. The deal we have right now that we're raising for is actually closer to 10% average yield because of the dynamics of the deal. And that equals out to be about a 2 to 2.5x equity multiple for investors. $100,000 investment will return 200,000 or 250 after the underwritten 5 year hold.
Okay, so that was my next question. What are your hold periods like? Are they
Yeah,
struck? What's the structure of your hold period?
absolutely. So I think I want to start with just a belief at Colony Hills Capital. We believe of the velocity of money effect, right? How quickly can we turn your capital over and get it back to you and then into the next vehicle, right? Create that flywheel effect, I
Hmm.
think is mutually beneficial. So we will always underwrite to a 5 year hold. That's just a traditional underwriting that we have. However, based off of the value add strategy that we do have, our value add is done by year three, ideally, if we're executing correctly, and then stabilized by year three. And that's where we can achieve the highest IRR on a property. So we want to capture as much cash flow as we can. But after that year three, the year over year changes, it stagnates, right? It's just stabilized. But if we can exit and then get into the next deal, like I said, we create that flywheel effect. So our typical hold period, I'd say, is 3 to 5 years in that time frame. And of the 10 exits that Colony has had, we've been able to outperform that 20 IRR to have a levered IRR of 36% on those exits. So when we shrink that time frame, the IRR will jump. So yeah, that's our strategy, and we're sticking with it for the foreseeable future.
Can you explain what IRR is to me as if I'm a fifth grader?
Absolutely. I think IRR and ARR or ROI are all terms that get thrown in the same bucket. And a lot of people, the most common one is ROI, right? Return on investment. So if you have 100% return on your investment, that's great. You've doubled your money. But what is that over? A 20-year time frame? Is that over a 50-year time frame, right? Somebody tells me they got 100% ROI, that's great. But if it's over 50 years, that's not so great. So IRR is a unique vehicle or a unique number or statistic that annualizes the return, right? So it's a compounding number and breaks it down to a year by year. So if I've got a 25% IRR over a 5 year period, that's the equivalent of earning 25% and then taking that 25% and then earning it the second year, and then again the third year, and then again the fourth year on a compounding basis. So I don't know if it may be a little bit more advanced than a fifth grader, but I do want to emphasize the difference between ROI and IRR.
uh, yeah, it was a little, maybe sixth or seventh grade, but I haven't been to fifth grade in a while. So, what
Hey,
advice?
these questions they ask on "Are you smarter than a fifth grader?" are pretty tough these days. So maybe the fifth graders are getting smarter.
I hope so. Somebody is. What advice do you have for someone who is an aspiring GP or LP in the space?
I think it depends on obviously which bucket you're in, right? If you're an LP or you're a GP, I think obviously it starts with education and just becoming more knowledgeable of any industry, right? You can be a LP in a hedge fund, but I think becoming more educated on what your investment is going to be. But the biggest thing that I'll always talk about on podcasts or to anybody that I've talked to from my own personal success is your network, right? Is how far are you, or how many contacts are you away from getting to the person that you want to meet or be introduced to? So start to build that network, value every relationship, because you never know who they're going to be able to refer you to or who they might know that you want to talk to. So I would start with your network, build relationships. That's how we've been able to get the off-market deal flow that we do, is because of our CEO and our CIO having 15 to 30 years worth of relationships in the industry that allow us to get some of those deals that maybe a first or second year operator or new GP might not be able to get.
Sure. I love it. I love it. So, Matt, what do you think that 2025 holds capital?
That's the burning question, isn't it? We're excited internally. I think where we are buying in the market cycle, we're pumped about, right? So I think it's a combination of getting discounted deals right now. And I think 2025, there will be a lot of loans coming due from 2020, right? When COVID, all of those operators that got 5-year debt in 2020, those properties are coming up. We're excited about the opportunity in the multifamily space. We're already seeing some of that deal flow come in now, and with the deal that we've got right now is a unique offering. So we're excited. We're in full acquisition mode for our fund and for our direct deals. So we're excited. I think that the new administration will be positive for the real estate sector as well, in terms of some of the depreciation benefits that have been there historically. So yeah, we're all excited for 2025.
Love it. Matt, what makes you happy about what you do every day in commercial real estate?
Absolutely. That's a great question. I think for me personally, because I came from the sales side, I was always working kind of one-on-one with clients and investors and hearing more of what their goals were, right? Obviously, the goal of anybody's investment in real estate is to make money. But some of my favorite clients on the brokerage side were the investors, right? We're the ones who were looking at the numbers, and I could talk to them, but taking more of a fiduciary responsibility and hearing what their goals are, right? And just to be transparent with them. If they're looking for a different asset or a different investment, and I'm not going to force our offering or what Colony has to that investor, if that makes sense. So really hearing everybody's story, what their bigger goals are, right? If it's to retire early or provide supplemental income or provide generational wealth for their kids, I want to hear those stories and help that Colony and myself can be a part of that. And I think that's what I enjoy the most, is hearing each story, figuring out how Colony can add value to them and help them achieve those short-term as well as long-term goals.
So Matt, say I own a 200 unit value add apartment complex in the Northeast. How am I getting a hold of you, finding you, following you, and investing with you?
Yeah, you can reach out to myself on LinkedIn, Matt Spagnolo. Colony Hills Capital is also our website, so you'll hear a little bit more about our fund on there. We have a direct deal offering as well. Like I mentioned, if you don't prefer to go the fund route, that direct deal will be listed there with all of the data and the information that you might want. We also do have a link for you to schedule a one-on-one call with myself for more information about the fund or the direct deal. But happy to chat with anybody. Happy to also make any referrals or introductions that somebody might be looking for in the space of somebody that can help you. So I have the mindset of providing value to others before kind of receiving that value back. So any way that I can help you or anybody else that's listening, shoot me a call and happy to see how I can help.
Well, Matt, thank you so much for being on the show today. We'll put your
Thank you for having me.
we'll put your info in the show notes so everybody can contact you. And if you're listening, we'll see you next week. Thank you for tuning in to Commercial Real Estate Secrets. If you have found our podcast to be valuable, please be sure to subscribe, rate, and review on your favorite streaming platforms, and make sure to follow us on social media at Aviva Real Estate. For brokerage services or to get in touch with us, head over to thewarehousehotline.com and submit a contact form. My name is Aviva. This is Commercial Real Estate Secrets. We'll see you next week.